a virtual card that is in the app that I can copy and paste into websites. And if it's ever compromised, it's, they know and they just shut that off. But my main card account remains intact and remains safe. That security and that authentication level help increase that while you're also keeping the friction low.
Hello everyone, my name is Maciej Nowak and welcome to the Awesome to Know podcast where we discuss all things related to building great websites. Today we are exploring the complex world of payments with our guest Web Griebel, the global head of payments at Ecommerce. With nearly 20 years in the payment industry, Web brings deep expertise from roles at major payment service providers like Global Payments, giving him unique insight into how payments really work behind the scenes. We'll dive into what happens when someone clicks Pay Now, the building blocks of payments ecosystem, and why merchants should think of payments as more than just a cost center. Web shares practical advice in reducing checkout friction, protecting against fraud, and understanding the global payment landscape with card networks to local payment methods. We will explore emerging trends like account-to-account payments, the evolution of digital wallets, and how payment data can become a powerful economic indicator. Whether you are running an e-commerce store, building payments integrations, or simply curious about what happens to your money when you shop online, this conversation reveals the fascinating mechanics of modern payment ecosystem. If you want to learn more about building great websites, please subscribe to our newsletter at awesomestudio.com/newsletter. If you are watching this on YouTube, please give us a thumb and subscribe to our channel. This means a lot to us. Without further ado, please enjoy my conversation with Web Griebel.
Hey everyone, it's good to have you here. We're glad you decided to tune in for this episode of the Awesome to Know podcast.
Hi Web, how are you?
I'm doing well, Maciej. How are you?
I'm also good. Thank you very much for coming for the pod. I'm very excited to have this chat about payments, as you might expect. And I would like to maybe first start with like a short question. If you can introduce yourself to our listeners so that they can have a little bit more of understanding, like who you are, what do you do, and a little bit of a background.
Sure, be glad to. First of all, I'm grateful to be here with you. Love talking about payments, especially in the e-commerce space. So my name's Web Griebel. I am the head of payments, the global head of payments at WooCommerce, which is an automatic business. I've been in payments, oh my gosh, nearly 20 years. Spent spanning roles of product management, partnerships, even sales way back. And prior to WooCommerce, I was with a company called Global Payments, which is a multinational payment service provider. So it's a space that I am quite familiar with and love to sort of track and be part of the evolution of payments, especially in the digital and e-commerce space. So thanks very much for the chance.
Yeah, my pleasure. Look, I want to learn something too, right? So that's pretty cool. Thank you very much for the intro. And maybe for starters, thinking about merchants who are going to think seriously about payments. What are like typical misconceptions they might have? People who get to a certain scale but not huge, right? So I'm curious if there are common misconceptions you run into, when talking to them.
Yeah, great question. So I think first and foremost, a lot of merchants view payments as a necessary evil, right? Even a cost center, and I guess on the face of it, they could believe that because for many years, in fact decades, there was really not a lot of value created around the payment transaction, right? But if you fast forward to today and you think about mobile payments and digital payments and on e-commerce payments and the like, when they're implemented correctly, with the right providers serving the right markets for the right products and services, they can really add value to your business, especially in the online space. So the right payment implementations can increase conversions and sales, so product conversions, cart checkouts, and so forth. They can actually be a revenue stream for certain software business models and so forth. And they can also be a way for you to have a better relationship and connection with your customers. So those are sort of three misconceptions. It's not just a cost center. When they're implemented properly with the right types of partners, they can actually really help accelerate a business in the online space or otherwise.
All right. Yeah, I think we will be getting there, especially when we will be considering the, let's say, global payment ecosystem. Let's say so. So I think we'll circle back to this concept, and maybe still as starters, can you walk us through what happens, when a buyer clicks on, pay now button, what's happening there behind the scenes, because everyone sees like pay now, right? And then goes to different providers, right? But, in a nutshell, what happens after that person clicks pay now?
Sure. Great question. There's a lot of moving parts behind the scenes. So I'll focus in on card payments, a typical Visa or MasterCard payment. What typically happens in those scenarios, or what happens in those scenarios, is they click the buy button. Their data is securely, either the card number or their tokenized customer profile is sent to the issuing bank of the card, and it pings their network in milliseconds and says, hey, I want to make a purchase for 50 euros, and I'd like to, and the network says, okay, you have money in your account, or you have credit worthiness on your card, and it sends a message back to the payment processor, which is often referred to as the payment service provider. So somebody like Stripe or PayPal, or some of the major processors around the world. They then process the transaction and authorize the payment to the merchant, the seller of the goods and services that the customer is buying. And within a day, sometimes even in real time scenario, the payment for the purchase is transferred to the merchant, the seller of the goods, and lands in their bank account. And all this can happen in just a matter of seconds.
Perfect. That's why we do this, right? That's why we use cards. Building on top of that, what are the building blocks behind the payment ecosystem, payment technology that the merchant should understand, to have a broader picture, not very nitty gritty, but on a level of big blocks, so that you not only think about the cost center and the necessary evil, but rather understand the process a little bit more. What are the components? You mentioned processor, right? What
Yes.
other big blocks there are?
Sure. So I think at the highest level, a merchant has their bank account, right, where they receive funds for goods that are purchased, and so that's probably the most important one for a merchant, because they need to make sure they're receiving goods or money for their goods or services. You have the payment service provider, or the processor, sometimes known as processor. They're global ones, like I mentioned before, like Stripe or PayPal and some others. Is the customer, the buyer's payment method, and that may be a branded credit card that runs on the MasterCard or Visa network rails, or it may be a local payment method that's native to their country or region, a popular payment method, which often those are account-to-account based payment methods. So such things as Ideal in the Netherlands, or Blick in Poland, Pix in Brazil, etc. Those are known as account-to-account payment methods. So they're essentially facilitating a transfer of money from one person's bank account to from the buyer's bank account to the seller's bank account. There are various intermediaries between them, but those vary country to country, right? So a high-level example would be in the United States, we have the U.S. Federal Reserve that facilitates the transfer of all payments within these networks or between the banks as well.
What role does it play? Like, what role does it take in the sense that is it like a centralized, like everything goes through that entity, or is it providing infrastructure? Like, what is its role?
Sure. So the Federal Reserve's role is a centralized sort of clearinghouse, if you will, that basically facilitates all the payment transfers from one bank to another in the U.S., right? And then also it facilitates payments from U.S. banks to foreign banks as well, right? Through other networks like the SWIFT network. So it is a facilitator of payments. It tracks them. It is basically, I very much put it akin to sort of the centralized hub from which payments run through.
And a ledger of all of the transactions as well?
Yes.
All right.
Yeah.
Okay. All right. And you mentioned, a couple of methods like Blik in Poland or other methods, and I'm curious, but you started with the card example, like what happens when someone is paying with a card, but there's a number of different options, and thinking about, and commerce is, e-commerce is wonderful because everyone from like all of the world can buy something, and then you hit a problem of different payment methods native to a given country. Click in Poland, wonderful solution, by the way, I love it. So I'm curious, how merchants should think about global ecosystem of their customers versus their ability to pay with what they have, in terms of what kind of payment services they have available in their country. Like what mental model should merchants build, and how should they think about this? Like, is it card only or anything else? Like, what should be the strategy here?
So when merchants are selling goods and services, they're generally solving a problem or solving a customer need or desire for a customer, right? And so they do that with whatever the product or services that they sell. And they should think of payments the same way. You want to meet a customer where they are in terms of payment. So if a customer favors a specific local payment method because it's very popular in their country or region, or then you want to be able to accept that, which will also increase your chance of converting the sale and not having an abandoned shopping cart. So they really want to look at like payments as a way to meet their customers where they are, to enable them to make a purchase with as little friction as possible, and maybe even sell more or bigger order value as well by doing this. Because if you're meeting more where they are, then you're making it convenient for them to buy your product or service. And they should think of payments the same way they think of, solving a customer problem with their service or
That concept of friction is interesting because there are so many branches in marketing that focus on optimizing, minimizing the friction, customer experience and so on. And then at the very, very end of the journey, there is that, pay button waiting for you to pay. And then there's that last one step of paying. And how can you think, because we know so much about optimizing for conversion before that hitting that pay now button. How can merchant can optimize for lowering the friction for that last step?
Yeah, that's a great question. So I'll use myself as an example. If I am on a e-commerce website and I go and put the items in the shopping cart, when I get to the checkout experience, if I have to fill out a whole bunch of fields with, keying my card number, keying in my billing address, my shipping address, et cetera, the likelihood of me completing that sale as a customer, that purchase as a customer, is far less than if I have the ability just to use one of my favorite digital wallets that I can authenticate, with some sort of biometric authentication, either my thumb or a Face ID or something like that, which will then populate all the relevant fields in order for me to get the product or service in shipped over to me. And so they want to think about like providing payment methods that are both secure and reduce that friction of completing, the relevant information that the merchant needs to complete the sale. They also want to think about such things as ensuring that guest checkout is available on their site. Because if you require somebody to set up an account, that's yet another friction point, right? Like they want to, we've already spoken about the local payment methods, and, which is yet another way that they can encourage customers to convert their sales. Also, there's an opportunity through their payment service provider or their checkout provider, their e-commerce store. They want to think about there's the ability now to dynamically surface specific payment methods at the checkout, depending on where the customer is located. And so things like
this is at hand, like the list would start, for example, with the one that is native local to you, where you are right now, right?
Yes. Yep. Native to where you are. So if, my checkout experience on a website that has dynamic payment methods enabled and, sort of reordering in the checkout, like sort of reordering the payment methods dynamically and is going to look different than yours because we're in two different parts of the world. And yet that will help to, make sure that that the merchant that we might both purchase a product from is going to convert the sale as likely with you as it would be with me as a customer.
Mm-hmm. I like it. I'm remembering when the e-commerce was starting or was already, started when I was so much younger than I am now. But, I remember the days when you would have to most of the time send a bank transfer. And then, the online payment came and now we can order, like, these are like, it's a little bit of a, like, first you had to log into your bank, fill out the transfer, then worry if you didn't make any typos or something like this. And now you can touch, with a thumb you can pay on your Mac probably, or with Face ID, for example. But now I'm thinking that it's like a law of diminishing returns. Like there isn't any much more we can optimize. Like it's like nearly the optimization is like complete. You can't probably make anything more to lower the friction because it's just double pressing on your iPhone, for example, to approve the transaction, right? Is there anything else you can improve even further than that?
Yeah, that's a great question. I mean, we're always thinking about the things that that you can improve upon. Like the ideally, if you have the friction as low as possible, you also want to typically friction and security are going in opposite directions, right? So, you're as a merchant and as a payment service provider, you're typically balancing, reducing the friction with also maintaining proper authentication and security such that you can convert sales, but make sure you're converting legitimate sales to legitimate customers. So there are tools out there, secure customer authentication tools like 3DS2 and some of these others that that help enable that that security and that authentication level, help increase that while you're also keeping the friction low. There's also opportunities, I would say, for single purchase or single click checkouts, right? Sort of these buying experiences that are mobile enabled, not necessarily full shopping cart, where it's just sort of a product enablement and one-click checkouts that also maintain that level of authentication that we spoke about. Because one of the nice things about many of the digital wallets, or really all of the digital wallets, are they are not, the merchant is never in contact with the customer's actual payment modality, right? Their actual credit card number or bank account number or whatever. For many years now, we've been using, or the industry has been using tokenization, which is really a representation of the customer's important and secure payment information, right? And so exchanging that tokenization, really encrypting it, sending it along as a token, or just simply, I like to use the analogy, if you ever go to a restaurant and you check your coat and you get a tag, and they give you a tag, and you walk away and you go to your table and you eat your dinner and you come back and you have this tag. Well, you have your coat, but it's not really your coat. It's a representation of your coat. And so this is a similar scenario where we, in the industry, we tokenize the really important and sensitive customer information around their payment modality. And merchants exchange that token, but never exchanging the modality. And those types of things are really, really important. And these digital wallets, the likes of Apple Pay, Google Pay, PayPal for sure, and likely many others, are all highly secure tokenized scenarios. So that is actually one extra layer to both protect the customer and the merchant, because the merchant does not want to hold, it is not in their interest to hold customer sensitive payment data. It's like a hot potato, right? Like
It's like a liability.
it's a liability, right? It's like having a piece of hot coal in your hand. You don't want to hold that.
Yeah, and I know, like those who want to have it, like that's a problem, right?
Yeah, and I don't want a merchant to have my payment information. Like if a merchant has a file folder on their system full of card numbers, that's a real problem.
Yep.
Yeah.
Yep. But when thinking about this, there is that I would say initial interface where you have to actually type those numbers. There's no other way unless you're using a digital wallet. If you're resorting to physical card and card number, you have to type that card number into some text field on the website, and this maybe then be later tokenized. But for the customers, this is the moment when they are vulnerable. Like it can be hijacked, taken over, copied, mirrored. Even if the transaction is going through, it might be copied in parallel, let's say. So is there anything a customer can think of when protecting themselves, or maybe even merchant? Is there anything merchant can do? Because if you are using like external solution, you trust that they are good, right? That they will handle that. But is there anything you can or you should be thinking of on that visible layer where the customer is putting their very important numbers?
Yeah, I think a couple things. Like that scenario that you describe is a very good use case for the digital wallets that I just mentioned. So whenever possible, if you can, as a customer, if you are comfortable to enroll in one of the digital wallets that serves your region, that is usually a better scenario than ever keying in a card number. Another thing customers can do if they don't want to use a digital wallet. I know that many of the card issuers, so the banks, card issuers are the banks that issue credit and debit cards and payment methods. A lot of the credit issuers the card issuers offer virtual cards. And so that is another option. So for me in the US, I have a Capital One Visa card. And for my online purchases, I actually have a virtual card that is in the app that I can copy and paste into websites. And if it's ever compromised, it's, they know and they just shut that off. But my main card account remains intact and remains safe. So I would say two considerations. One, use a digital wallet if you can as a customer. And two, if you're not interested in using a digital wallet, then look to service providers that, for your credit cards or your debit cards, et cetera, to use a virtual cards. Those are one-time use. Often they're one-time use cards.
I was mentioning that law of diminishing returns, but it was from the perspective of a given user that is, an individual user who is very high in that, let's say sophisticated. For that person, there's little we can probably do to make his checkout process more convenient. But looking at the, let's say, population, not everyone is on digital wallet, right? A lot of people are copying and pasting their card numbers stored somewhere, just for the sake, or retyping them. So I think what might be an option to make, like on a global scale, the whole checkout process more convenient is to onboard more people to digital wallets, different digital wallets, so that they onboard and they don't have to type their numbers, right?
For sure. And also for the things like, pre-populating checkout fields in general, like outside of the, like some of the browsers actually, and I should have thought of this 2 minutes ago, but some of the browsers also securely store your payment credentials, right? So the Safari browser and Chrome browsers are two that I know for a fact that do that, and they do it securely with a tokenized, a tokenized representation of your payment modality. And so that's also another option that, that customers could use. There's certainly no foolproof way, no 100% way to protect yourself as a customer or even as a merchant against fraud. The fraudsters always seem to stay a step or two ahead of the rest of us, but there is some pretty strong, generally accepted and highly successful methods to keep prudent and safe.
Mm-hmm. And we were discussing this from the perspective of the individual and how the merchant should think about their security. You alluded to that, but I'm curious, if you could dive a little bit deeper. What merchants should do? Are there any strategies for merchants, or best practices, except like using reliable, components for their e-commerce platform? But what else can be done by the merchant to ensure not be a victim of frauds?
Number one is keep their website updated to the latest versions of the checkout, whatever their provider is, whether it's a WooCommerce or Wix or Squarespace, Shopify, et cetera. Always keep your website and your checkout updated to the latest versions of the software, because many of those versions, the reason that they're updated in many times is to fix vulnerabilities or things along those lines, right? And so that's number one, first and foremost. Number two, make sure they're using a payment service provider that that very seriously takes the security of payments and has a demonstrated a demonstrated methodology around doing that. So when you mention keying in card numbers, there should never be an instance where a card number is keyed in that is not being keyed into at least a hosted field, right? That is then immediately tokenizing, right? And the merchants would never, ever want to, not even for a second, have sensitive customer data on their servers, right? At all, right? They need that needs to go right to the payment service provider, and then respond with a token, right? So that's number two. Number three, whenever possible, if appropriate, like fully hosted checkout experiences take the merchant even farther out of scope of of these types of vulnerabilities, right? So but when you have a fully hosted experience, let's say it's hosted by the payment service provider, you generally you may be compromising sort of the user experience and the look and feel of the checkout versus versus the rest of the store. So there's considerations to be taken. I think they should really just consult their service provider, their agency or developer, or their technologist in-house that is building and maintaining their site. And the last thing that I think is really important for merchants to do is either have scanning software that is constantly scanning for vulnerabilities around these types of things, or hire a QSA or one of these companies that is really their whole purpose is to help protect online businesses against vulnerabilities related to payments and otherwise. So those are the types of things they should
What are the, maybe not the best, like worst case scenario, but what are the average bad case scenario where in which a merchant has problems from because of all those vulnerabilities, but maybe because of some kind of a fraud? Like, what types of problems are we dealing with?
One of the most common problems is card testing. And it literally is when a fraudster will write a script or have a bot that basically just constantly pings a merchant's checkout with new card numbers and tests them just to see if the card's active, right? Even for a penny or two, right? And they literally can do this in the blink of an eye, in a matter of minutes or hours, or even longer if it's not caught. They can accrue like many thousands of dollars in authorization fees from their payment service provider and those types of things. So that's one of the most common threats, is sort of card testing scenarios where where a merchant falls victim to a bot attack where they're just constantly testing card numbers. And one way to protect themselves against something like that, there's probably multiple scenarios, but they could they can make sure that their checkout page times out every so often, right? So that it requires a full reload before you can test another card. Secondly, those secondary authenticators where the "I'm not a robot" type of checkbox with maybe a a visual cue, some sort of authentication, CAPTCHA. Thank you. And just generally, they need to be wary of those types of things. Those are very common attacks. The merchants can fall victim to them repeatedly, even if they're not addressed properly.
But that's super interesting, because I have never thought about a situation in which you can like randomly generate numbers and they will create a card number, and you can test if that particular card number is active, and you would outsource this to another. You would outsource this to an e-commerce owner, so that they are doing the authorization, and they would be paying the fees for the authorization for the card processor. But at the same time, like, wouldn't you need the CCV number, full data of the owner of the card? Like, is the card number the only thing you would need in such a scenario?
Yeah, that's a great question. You raise an interesting point, which is one of the things that a merchant can do is require, like, we refer to sort of tighten down their settings, their authorization settings, and ensure that that they these settings are generally adjusted from within their payment service provider interface on their checkout. So if they're using Stripe or PayPal, for example, they would have to log in there and adjust these settings. And essentially what it does is require things like the billing zip code or the billing address or the 3-digit CCV, the security code, typically on the back of a card, or in the case of American Express, it's a 4-digit code. But yeah, they can really tighten those. We refer to those items as level 1 data, and they can require full level 1 data, in order for a transaction to process. And if they get a mismatch, let's say somebody makes a large order on their store and the billing address is much, much different than the shipping address, and it's a sort of a suspicious order, they should really be prudent about, like, perhaps calling up the customer or messaging them in some way, WhatsApp or whatever, and figuring out, trying to authenticate that the customer is real, it's somebody that they know, or, and then they can, they just need to be judicious and very prudent about these types of things, not just let every sale go through.
So, but the transaction would go through if the name and surname wouldn't match the owner of the card. The card number would be correct, but the owner would be typed incorrectly, and this would still go through?
Yeah, well, they can adjust it to decline. They can adjust their settings to decline those.
Okay. So this is a manual setting. Like, you have a control, like you can only accept the correct card number, and if everything else is wrong, that's still fine. It's your choice, right? Something like this? Okay.
Yeah, merchant has control. It's really an interesting thing. And merchant has control to set that level 1 data. Like, you always will need the correct card number, and you will always need the correct expiration date, right? But you can, as a merchant, you can change settings. Like, you could require the security code or not require the security code. You could require a billing zip code and a street address or not require those things. At minimum, they should be requiring the security code. And if they want, there's other factors here in play with this level 1 data that we're speaking about. It also can have a positive effect on the pricing of their card processing as well, right? And basically, the more correct data that is passed at the time of transaction, the more secure the transaction is, and often more favorable the pricing from their payment provider.
But is the price, let's say, priced dynamically based on the history of transactions, or is it some kind of a fixed price based on the agreement that I will be providing this level of information?
It really varies from payment provider to provider. And when I talk about this level 1 data that I'm talking about basically your typical card networks, right? Your Visa and your MasterCard. As you think about things like account to account payments or local payment methods, I think those are so nuanced on a region by region basis, and I don't really have committed to memory what the sort of any implications around pricing.
Yeah, sure. Maybe my last word of comment is that I would expect the consistency of my data, like, for the sake of my protection. Like, some transaction may not go through because I may make a typo, but having consistency of correct name and surname, all of those details the card provides, and I have to type, I would expect that this is for my security, so that my card is not compromised, for example. And there is, I learned now so many ways to compromise my card even without that card being in possession of anyone. Speaking of the fraud still a little bit more, there is the concept of chargebacks and dispute resolution, and unless you are hit with disputes and chargebacks, you probably don't know, as I mentioned, what's all of that about. And could you introduce our listeners a little bit into the concept of what happens if someone disputes the payment.
If it is a payment that has been made on a credit card, like a Visa or MasterCard or American Express, the merchant has an opportunity to respond with documentation that that validates from their perspective that it was a legitimate sale and the product or service order was fulfilled properly. They have an opportunity to respond and show evidence that, for example, show tracking information that a product was delivered to the customer's shipping address. Right? They have the ability to show product level images, things like that validates that it was a legitimate sale from the perspective of the merchant, and they can in some cases win, right, as long as they keep the right documentation. In many cases they can win. In bank transfer scenarios or account to account scenarios, the dispute process for customers is far less favorable and far more favorable for the merchants, because once the merchant receives the payment, usually that's a final scenario. There's generally not a clawback or type of scenario like where where a customer can get their money back. But with the card networks, with the Visa and the MasterCard, the American Express, because they leverage their position as an intermediary to sort of moderate the experience, because from their perspective, the card networks, the customer is their customer is the buyer of the products or services, right? The card holder. And so they want, that's part of the service they provide, is really sort of a moderation or mediation between a merchant and the buyer. There are some considerations that I would say merchants should have, and we've seen lately in the past few years, it's really sort of increased a bit, this notion of friendly fraud, which is customers buying things that maybe they can't afford or never intended to pay for, and they are leveraging, they're basically taking advantage of their relationship with their card issuing bank and disputing a transaction. So that
why is it friendly? Where is the friendliness component in it?
It's not very friendly. It's not very friendly, but it is different than like organized fraudsters going out and doing this. This is people. So it's people that are actually receiving and using the good or service that they should be paying for. And no, it's not very friendly, but it is
friendly as infrequent. It's like not organized on a scale. It's just infrequent, so it's friendly in this fashion.
It's kind of ironic that they would call it friendly fraud, but it's sort of the known customers. And some of the ways that the first line of defense for a merchant to protect themselves against disputes and chargebacks for e-commerce companies and for payment service providers is education. Merchants need to know. So most often, small, medium business merchants, your typical small website retailer or seller doesn't think. It's not that they don't care. They're so busy trying to run their business, like their core business, like selling and making their widgets or whatever it is that they do, that they don't think about things like disputes until they have one, or until they have a series of them, right? Or a significant one. When it becomes a problem for them is often when they pay attention. And so one of the best things that payment service providers or e-commerce platforms or technologists that serve these customers can do is to educate these merchants on what disputes, how they happen, how they can defend themselves against those, what sort of documentation that they should keep on hand for each transaction. So things like, keeping good records of product level data, making sure that those level 1 settings that you and I spoke about a few minutes ago are really, set up to pass the most authentic and correct data for the buyers, and doing things like that are prudent, making sure that the transactions that they are accepting and sending out products and services on are properly authenticated. And those are the best ways that they can keeping track of the shipping, the shipping documentation, tracking numbers, delivery dates, those types of things are also very, very important. Those are the first line of defense for a merchant, is to be educated and be aware of, this possibility, and prepare themselves with the appropriate documentation. The second thing that merchants can do to prepare themselves and sort of combat this, these disputes and so forth, is to model it into, at some level, model it into their business and say, okay, I'm going to have, every business, whether it's an online business or otherwise, will always have some degree of outstanding receivables, or some customers that just don't pay them, right? They don't pay their bill, or they lose the money or something for whatever reason, right? And so they need to build that into their business model and say, okay, I'm going to have, 2% losses or whatever, in a given, in their budget, in their planning, they need to think about this. This is something that they need to consider. The third thing they can do is, especially if they're growing quickly, some of these online businesses scale really quickly, and then they encounter these growing pains like disputes, right? And the third thing they can do is look at outside. There are outside providers that can either help programmatically respond to the dispute flows, right? And make, and help them keep on top of disputes. There are also other providers out there that will offer some level of insurance against disputes. So, essentially, they will cover the cost of disputes. And some of them will look at it in aggregate, like in total, and then others will look at them on a case-by-case basis, and basically will actually reimburse the merchant for a dispute that occurs.
Mm-hmm. I heard recently that Stripe has introduced a new fee for responding to disputes. You pay $15 for if you receive a dispute, but if you want to respond to that dispute, because of the costs incurred or generated by the card networks, Stripe has added $15 charge if you want to respond to the dispute.
Wow. I was not aware of that, but what I will say, having worked at multiple payment service providers in my career, I spent, nearly 15 years at 2 different payment providers prior to coming to the WooCommerce business. And there is a cost for payment service providers to process retrievals and disputes, to process that documentation, meaning they have to put people and resources towards it. And I suspect that some of them, may use it as a revenue stream as well, right? Charging fees against it. It is very common for payment service providers of all types to provide or to charge processing fees for things that go beyond just the core basic card payment processing, right, or ACH processing. They'll charge fees for PCI compliance, or they'll charge fees for reporting and servicing. They'll charge fees for you name it, right? And and it varies across a wide spectrum. But I guess what I'm saying is I'm not surprised, but I wasn't aware of that.
you mentioned the PCI compliance, and can you explain the concept of that compliance? I think this is something or something like this. So it's a little bit changing, but can you give us a helicopter view of that, of what it means, and what to think about this, and so on, like general intro?
Yes. So there is an organization that is comprised, so it's the PCI DSS, Data Security Council, and it is comprised of basically representatives from the largest payment networks, Visa, MasterCard, American Express, Discover. And they set governing rules and standards by which merchants need to basically adhere to be to be considered PCI compliant. It is largely done. The whole premise of PCI compliance is to mitigate risk, right? Risk for customers, risk for the payment networks, risk for the merchants, risk for the card issuing banks, and everyone along the food chain, if you will. There, for better or for worse, they spread the responsibility of this largely across the payment service providers and the merchants. And so a merchant is considered the first line of defense against fraud because they are the first interaction with, the buying public, right? The consumer public.
They're on the edge.
So you have the leading edge, right? The tip of the spear, if you will, right? And so typically what happens is, so most recently PCI 4.0 was announced earlier this year. I'll be candid to say that I don't know the requirements. I don't have them committed to memory at the moment. But what I will say is that it has shifted a bit more, sort of responsibility for having buttoned up and secure websites, processing software, and hosting environments on the merchant. And there is already a lot of responsibility on the payment service provider. I do know typically when these issues or when these sort of new mandates come out from the PCI Council, usually the public, the community of merchants and payment service providers and all the constituents that care about this weigh in. And then usually based on that, like, the rules get adjusted and they get, they get tweaked as needed, and until there's sort of a reasonable balance that is struck or stricken. I don't know if that's the right word, but the best thing, like if a merchant is running a large e-commerce site or even a small e-commerce site, the best thing they can do in the near term is to read up on these things and make sure that they are, make sure that their payment service provider is aware and also informing the merchant of what the payment service provider should be informing the merchant of what they are doing, because the PSP is sort of the leader in responding to these types of things, and they should really focus on being educated about it. And then also, as I mentioned earlier in our conversation, which is making sure that their software and their platform is up to date with all the latest updates and security fixes and so forth, is really important as well.
All right. This does sound a little bit strange that the merchant should be keeping in check the processor,
a relevant comment. But I think what I mean by not keeping them in check, just making sure that they are informed, like that they have gone and read up on, the processor should already be publicizing what they're doing, right? And their content around PCI compliance, like, yes, they're level 1 PCI compliant. What is their response to and their position on the latest PCI requirements? They should have that publicized. The processor should. And the merchant should take it upon themselves to go read and understand that. And if they have any clarifying questions, they should, get them answered, as opposed to holding them accountable.
I'm also thinking about a merchant who is scaling, and is there any difference in a merchant who is starting out and a merchant who has a thriving, maybe not a multi-million, but a couple of $1 million turnaround revenue a year? Like, is there any difference in how they should treat payments between a starting out and established business?
To my very early comments at the beginning, I think both, brand new merchants and established sort of scaled merchant businesses should be looking at payments as, as a way to add value to they should be looking at payments as a way to sort of add value and increase conversions for themselves and sort of scale their business. Because if they are looking at them solely from a cost basis and just like shopping on rates, right? Oh, what's your rate? Oh, I'm going to go to the one with the lower rate, right? That seems like a prudent approach from sort of an accounting and fiscal perspective. But the reality is, if let's say that they offer just 2 payment methods on their website, and they sell products that maybe have, large order, the ability for large orders, right? Like multi-$100 or multi-$1,000 orders. If they were to consider using one of the BNPL providers, like a Klarna or a Affirm or Afterpay or some of those providers, that may cost them more than the base rate on a credit card. It might cost them more for processing, but it may also increase. And it's proven that these alternative payment methods, some of these alternative payment methods, increase the average order value by 50, 60, 70%, sometimes even more, right? So they should be thinking about, like, how can they use payments to help their business scale? And as we talked about earlier, like meeting their customers where they are, right? And if you're selling something, a product or service, the best thing, in my mind, one of the best ways to enable sales quickly is allow customers to pay in the way that they want to pay. And that's how they should be thinking about it in my view. And it doesn't mean that they have to have their checkout plastered with every single payment method and logo on there, because then that becomes, a law, to your point, that becomes the rules of diminishing returns, right? It becomes sort of so confusing that a customer may just freak out and leave, right? But but if they are in a position to, especially if their PSP or their checkout platform uses dynamic positioning of the payments, that can even be
what might be the difference the payment processor can make on a business of the merchant, except having different fee, right? Buy now, pay later is a totally different kind of services. It's not card processing, right?
Right.
Klarna can have obviously card processing, but BNPL is another like a payment method, right? So I'm curious, if you look at the landscape of payment providers, how the merchant should be deciding except comparing similar services, because not that would be unfair to compare payment processing with another service. But looking at payment processors with similar functionalities, what should you be looking at except fees?
What payment methods they enable, right? What are they offering through there? What
Okay.
what their contract requirements are, right? Do they have long-term contract requirements? Do they have onerous termination fees? What is the their payout schedule, right? So typically, some processors. When I first got in the industry, and you to accept payments on a website, you may have to wait 5, 10, 20 days. The payment processor will hold your funds
For 20
that
days.
long.
For the 20
Oh,
days.
yeah. 3 weeks. I've said in 2005, that was like not uncommon, right?
Sweet.
And yeah, sweet. It's a good way to go broke, right?
Of course.
Yeah. But so looking at now, fast forward to today, a lot of these payment providers will some of them enable instant payouts to merchants via like the Visa Direct push program, and MasterCard has a similar one. And so you want to look at those types of things: payout schedules, contracts, pricing. What payment methods do they enable? What is the what sort of fraud tools do they have? And fraud, and what sort of education and dispute dispute process. What's their dispute process look like? Is it easy to submit documentation for disputes? Are there big fees with it, as you mentioned earlier? What is their service level like? Can you get somebody on the telephone if you want, right? Can you call somebody, or are you just in a chat bot, right? And they need to think about what's important to them. Some merchants require very low, they don't want to talk to anybody. And some merchants require very high touch services from their payment providers. So they need to consider sort of what they care most about. And if you are a merchant that requires a high touch experience, you're going to pay more, and they should be okay with that. It's like any service, a premium service, right? So those are the types of things I would be thinking about if I were them. I would also want to understand it depends on the merchant's business. So if the merchant is in a business that is considered high risk, either because of the products or services they're selling, or the notion of what we call future delivery in the industry. So how long from the time that I place an order? So if I am buying a piece of furniture, okay, if I buy this couch for $5,000, am I going to wait 6 or 8 weeks for that couch to come? That's a long span of future delivery, and for a very large order value, right? And so if a merchant is in, they should weigh their own business and against, they should talk to processors about the business, their specific business, and understand what the processor's tolerance and thresholds for these types of risks are, and whether they will, number one, underwrite and approve them for a merchant account, and number two, how do they treat the deposits and the payouts that you and I just spoke about.
I'm curious if you know about any payment products that are being developed right now. Like, we have for some time already buy now, pay later, and this is getting like a commodity. It's like going into commodity space. I heard that Klarna is going into cooperation with some kind of a burrito, food delivery service, and you buy burrito, pay later. So, like, maybe this is a marketing stunt, but I'm curious if you are aware of any, like, maybe not a revolutionary, but something that we don't have yet, but is being under development, something that is going to emerge as a new, maybe standard, something new and modern?
I also saw the news about the pay for your burrito over 4 installments. That's interesting to me. I think I'll get to your question in a second, but my thoughts on that are interesting. I know that the buy now, pay laters want to be ubiquitous. They want to be everywhere. And if I were them, I would want that also. And so in order for that to be the case, they need to look at those types of scenarios as well, right? And I also know, from industry reports and so forth, that generations of consumers that are younger than me and perhaps younger than you are really interested in not using your traditional sort of revolving credit card facilities that like so many folks have used for the last 50 years. And so they gravitate towards these buy now, pay laters and so forth because they can they know what they can set their terms, they know what they are. They're very generally very clear and laid out for them. In terms of new payment products, I would say in the US, we're fairly far behind the rest of the world in account-to-account payments in terms of adoption. But I do know that like the Federal Reserve has recently implemented FedNow, which is an instant payment modality, as well as RTP, which is real-time payments as well. These are the two players in the US. They haven't gotten large traction yet, but I expect over time, maybe slowly they will. There's also a new sort of what I would call wallet service, and it's a combination of a bunch of the major issuing banks. It's called Paze, P-A-Z-E. We spoke with them last year before they launched, and I think they're in sort of a soft launch mode now. And essentially what they are is similar to Apple Pay and Google Pay and so forth. They are a digital wallet where you can store multiple of your payment modalities or your payment credentials, and sort of have this as a one-stop authentication layer for a consumer to use. And I've not used it yet, but I think that these large card issuing banks that are involved in it, I think are taking it very seriously for a couple reasons. I think they're investing in it pretty significantly for both the risk factor that you and I spoke about throughout this conversation, but also the data, right? They want to know they want to know the product level data that is being consumed or, is being purchased by their cardholders from an e-commerce site. And they don't get that today, right? In the checkout, they just get the total sale amount. They don't know what the product SKU is or anything else. And they really want to know that stuff.
And why would they want to know that? Is it of any interest to the payment processor? From my consumer level, would I want to share that information, or would I want that information to be shared with the payment processor?
These folks, as opposed to this group, is more along the payment of the card issuer, as opposed to the processors. And so the reasoning for them to want to know it is risk and also customer insights. So that way they can then understand what are the things and the habits the customers have beyond just what stores do they buy products at, but what are they buying at those stores, what products and services, and they want to do that for marketing. We all know that data is currency, right? And so that's the reasoning behind it. As a consumer, the jury's out, right? The consumer, some consumers don't mind giving away all their buying behaviors, right? And for nothing. And then others want to do it maybe so that they can get promotional things, right? Like promotional marketing and things along those lines. So I don't know what the adoption is going to be, but I do know that that is those types of services are coming out for payments.
That's incredible, because when you say this seems only obvious and natural, and you can only ask yourself, why so late? Why this kind of data is not being collected from the down of the e-commerce, right? Because you have so many loyalty programs, or cards or apps, loyalty apps. You get a couple of dollars here and there in savings for being able to share your basket, your grocery basket all the time, and you can have a feeling like, this is exactly how much is this worth for the for the grocery chain. Like, you get 10% off your grocery, so this amount is like, your basket is worth this much, like, and then you can think how much more this is actually worth, because it's not possible this is worth only 10% of your particular basket, right? So if the group that is not selling anything to you, which are card networks, will get to know millions of baskets a day, like, that's incredible amount of data they can make use of. Like, that's like holy grail of e-commerce data. Like, not Stripe, but Shopify can do this right now, because if you are on Shopify, they have insights into your basket, so they know when the COVID hit and there was such a high in CPI. I read one comment from a CEO of one of those big groups. I don't remember the name. I couldn't find it later, but I heard that there's going to be like a sky high inflation, because they had the information so much earlier than anyone else would be able to get this. It was not official and something like that and all of that, but it was like 4-5 months earlier than the inflation started to be reported to
Like
be rising. So
a
this is
leading indicator, right? Based on the data
yes,
that they have, right? Wow.
yes, exactly.
That's
So
powerful.
it's
powerful.
And this is already available, but officially you can't tap into it, right? There is like metrics and so on, but on a gut feeling you can gauge this if you have that kind of information at hand in a big organization like Shopify, for example. I'm not saying this was a Shopify guy. I just can't remember who was that, and I couldn't then find that tweet later on when I wanted to find this. But that's incredible.
Just to comment on that, like Visa, which is the largest global card issuer, card network, right? And issuer of cards. They, in many cases, like I've been in their seminars and their forums and so forth, like, and I've seen their, they have teams of economists that work there, right? Economics professionals, right? And often they are able to know when regions or countries in the world are either going into recession or even coming out of recession, and they know before the governments do. And
yes,
it's not surprising. Right.
Yeah, they have real-time data, and the government will have a month-old stale data which has to go through, scrutiny of also politics, and they don't have to rely on politics, because for official data, the politics can skew interpretation or the methodology of the assessment.
Just the facts. Yes.
Exactly. All right. One more question. I now remember. Are disputes, so I'm circling back to what we've been talking before, are disputes only for credit cards or also for the debit cards? Is it only an American thing, or is it a global procedure?
It is anything with a branded Visa or MasterCard or American Express logo. So that includes debit cards and credit cards. So if there is a logo for a Visa or a logo for MasterCard, then as far as I know, unless there's some edge case carve outs, but I don't think that's the case, that there is the ability for a customer to make a dispute on a purchase. So debit or credit.
And because I was also always thinking that all of these situations where you are paying with a card, and because this is a credit card, this is not your money, this is bank's money, so the bank has a problem, and so on and so forth. So this was my interpretation of why disputes would be tied only to credit cards. But I'm surprised to hear that the debit card can also be used to disputes.
The banks earn significant amount, so Interchange is the revenue source for the cards, whether they're credit or debit. The interchange fees on debit cards are less than they are on credit cards. And the most expensive interchange fees are on the credit cards that are either high reward value, the ones, the platinum cards or whatever, that come with a lot of benefits, or the corporate cards, right? And those often come with benefits too. And the debit interchange fees are less. But the point is, the reason the banks, adopted, issuing debit cards, 25 or 30 years ago when they started, was because the convenience and the ubiquity of these card networks will enable you to accept payments, from your checking account, practically anywhere, right, from your banking account, and they make a lot of money on it, and therefore they're willing to tolerate the notion of a dispute.
Okay. Yeah. All right. Thank you, Eb. This was fascinating conversation about many things, financial and payments. I learned a ton, and I hope our listeners also learned a ton. And thank you very much. And see you around on one of the WordCamps, maybe.
I hope so. I'm not sure if you're coming to the States this year, but I'd love to meet you in person, in real life. And I've enjoyed our conversation, and thanks very much for the opportunity to chat with you. It's always fun to talk about payments for me. So hope you have a great day.
My pleasure.
Fantastic.
Yeah.
If you like what you've just heard, don't forget to subscribe for more episodes. On the other hand, if you've got a question we haven't answered yet, feel free to reach out to us directly. Just go to awesomestudio.com/contact. Thanks for listening, and see you in the next episode of the Awesome to Know podcast.